Here's a summary of Amazon's Q4 2025 earnings call, focusing on key financial metrics, management commentary, and future outlook, presented for clear oral delivery. Good day, everyone. Today, we'll review Amazon.com's financial results for the fourth quarter of 2025, with insights from CEO Andrew Jassy and CFO Brian T. Olsavsky. Unless otherwise stated, all comparisons are against the fourth quarter of 2024. Overall financial performance. Amazon reported worldwide revenue of $213.4 billion for Q4 2025, representing a strong 12% increase year-over-year, excluding foreign exchange impacts. Operating income reached $25 billion. The company also highlighted a trailing 12-month free cash flow of $11.2 billion. Key highlights and performance drivers: AWS acceleration. Amazon Web Services, or AWS, saw its growth accelerate to 24%, its fastest in 13 quarters. This segment now represents a significant $142 billion annualized run rate business. Andrew Jassy emphasized that this robust growth on a large base demonstrates AWS' continued market leadership. Chips business momentum. Amazon's custom silicon business, including Graviton and Trainium, has surpassed $10 billion in annual revenue run rate, showing triple-digit year-over-year growth. AI integration and investment. AI is a central theme, with AWS offering a broad AI stack. Services like Amazon Bedrock are now a multi-billion-dollar business, growing 60% quarter-over-quarter. New innovations like NovaForge aim to provide enterprises with uniquely customized AI models by integrating their proprietary data early in the training process, a potential game changer. The company is also investing heavily in its own AI chips, with Trainium 2 demonstrating strong price-performance advantages and seeing high demand, with Trainium 3 already showing even greater improvements. Amazon plans to invest approximately $200 billion in capital expenditures, predominantly in AWS, to meet the surging demand for both core and AI workloads. Retail strength and grocery expansion. The retail business continues to expand selection, with a notable influx of beauty and fashion brands. Amazon Haul, the ultra-low-priced offering, has grown to over 1 million items under $10 and expanded globally. Everyday essentials are a significant growth driver, growing nearly twice as fast as other categories in the U.S. Amazon has become a go-to grocery destination for over 150 million Americans, with plans to open over 100 new Whole Foods Market stores in the coming years. Delivery speed innovations. Amazon achieved its fastest ever delivery speeds for Prime members globally in 2025. Same-day delivery saw a nearly 70% increase in the U.S. Innovations like Amazon Now in India, Mexico, and the UAE offer ultra-fast delivery, and the Add to Delivery feature now accounts for about 10% of all Prime volume fulfilled weekly. AI in retail and advertising. The AI shopping assistant, Rufus, is rapidly expanding, with over 300 million customers using it in 2025. Rufus can now shop across other online stores. The Amazon Ads business also saw strong growth, generating $21.3 billion in revenue, up 22% year-over-year. Prime Video ads are now available in 16 countries, contributing meaningfully to revenue growth, with an average ad-supported audience of 315 million viewers globally. Amazon LEO and Live Sports. Progress on Amazon LEO is rapid, aiming to bring connectivity to underserved areas. Commercial launches are expected in 2026, with significant enterprise agreements already in place. Live sports, particularly Thursday Night Football, continues to break viewership records. Financial metrics and profitability. Gross margin. While not explicitly stated as a single percentage, the commentary on strong revenue growth and improved operating income in the North America segment suggests a healthy gross margin. Special charges. Brian Olsavsky noted that Q4 operating income was impacted by 3 special charges totaling $2.4 billion, $1.1 billion for the resolution of tax disputes in Italy and a lawsuit settlement, $730 million for estimated severance costs, $610 million for asset impairments, primarily related to physical stores. Segment operating income. North America reported operating income of $11.5 billion, with an operating margin of 9%, up from 8% in the prior year. International reported operating income of $1 billion, with an operating margin of 2.1%. Excluding special charges, international margins also expanded year over year. AWS reported operating income of $12.5 billion. Management noted that AWS operating margins are expected to fluctuate based on investment levels. Operating cash flow. Full-year operating cash flow increased to $139.5 billion, up 20% year over year. Management's forecasts and future outlook. Q1 2026 guidance. Net sales expected to be between $173.5 billion and $178.5 billion, anticipating a favorable foreign exchange impact of approximately 180 basis points. Operating income expected to be between $16.5 billion and $21.5 billion. Investments. Amazon LEO. Significant investment is anticipated in 2026 and 2027 for satellite launches, with costs currently expensed but expected to transition to capitalization later in the year. International stores. Continued investment in enhancing customer experience and accelerating the shift to online shopping, including faster delivery options and competitive pricing. Long-term ROIC confidence. Management expressed strong confidence in generating long-term returns on invested capital, particularly from AWS investments in AI and core workloads, citing their experience in forecasting demand and efficiently deploying capacity. Significant risk factors. Fluctuations in foreign exchange rates and energy prices. Changes in global economic and geopolitical conditions, tariff and trade policies. Resource and supply volatility, including for memory chips. Customer demand and spending, influenced by recessionary fears, inflation, and interest rates. Regional labor market constraints. World events and the rate of growth of the Internet, online commerce, cloud services, and new technologies. The unpredictable nature of demand for goods and services, which could lead to results materially differing from guidance. Key statements from leadership. Andrew Jassy, CEO on AI. We are seeing strong demand in these areas even in these early innings. He emphasized that AI is poised to reinvent every customer experience and create entirely new ones. He highlighted AWS' uniquely broad top-to-bottom AI stack and custom silicon as key differentiators. On retail, expressed optimism about agent shopping experiences, stating, "I'm very optimistic about the customer experience that will ultimately be what customers use for agent shopping. And I think it's good for customers. I think it's going to make it easier for them." He believes Amazon's own Rufus agent will be crucial and that retailers are better positioned than horizontal agents to deliver on selection, price, speed, and trust. On investments. We are going to invest aggressively here to be the leader in this space, as we have been for the last number of years. He is confident that these investments will yield strong returns on invested capital, mirroring AWS' historical success. Brian T. Olsavsky, CFO on financial performance. We are reporting $213.4 billion in revenue, up 12% year over year excluding the impact from foreign exchange rates. He detailed the special charges impacting Q4 operating income, but highlighted overall operating income growth. On AWS margins, we are seeing strong top-line growth while remaining focused on driving efficiencies across the business. He acknowledged that AWS operating margins will fluctuate, but emphasized efforts to offset investment headwinds with efficiency and cost reductions. On ROIC, we see strong return on invested capital. We see strong demand for these services, and we continue to like the investments in this area. He pointed to the immediate monetization of capacity as a key indicator. In closing, Amazon delivered a strong fourth quarter of 2025, marked by accelerated AWS growth, significant investments in AI, and continued innovation across its retail and advertising businesses. The company is positioning itself for sustained growth by aggressively investing in future technologies and enhancing customer experiences.